Okay, Ria also joined. Okay, thank you. So let me share. Okay, now you can see what has happened. So, and it. Let me check. Wait a minute. I've also joined from my phone to check if there is any technical issue or not. Thank you everyone for taking your time to join. Okay, now I'm on my phone also. Okay, no issue. Thank you. So now you see my screen. I will also switch off my video, start the recording. Okay, the recording has started. If you have any question, you can type in the chat box, and also I will go to all the changes which has been done on the equity derivative examination. It may be minor changes for you if you're preparing already, but those who are new and do not know, because it may impact in their preparations, they may be studying old curriculum, old thing, which may reduces their marks. Those who are at the edge of their examination, those who are unable to clear that, it will be sometimes very difficult to pass the exam. Recently I got a call from one of the uh, person who is preparing for the exam, unable to clear for 3 4 times, and there is only 1 or 2 day for the another exam, and it may impact their salaries or promotions or incentives. Those who are still working in the uh, this broking industry, those who aspire to join and looking for a job opportunity, it is very important to clear the exam. uh, Now the questions may be difficult because we only understand the few concepts and try to take the exam, and we won't be able to clear the exam with good marks. So this is the in April last year, NSE has reduced the contracts of the Nifty futures or Nifty options from 50 to 25. And there was a lot of market volatility during in the options contracts. So what SEBI has done, SEBI has changed the contract value from 5 lakhs to 15 lakhs. It means that the reduction of the Nifty future contracts or options has been changed. Uh, in the examination, what kind of questions may be asked related to this one? Uh, they they may ask the Nifty futures contract. Currently, it is 25, which is not correct because we are reading the NISM study material. So do not rely only on the NISM study material. You need to study for your interview purpose also. Because if you tell the interviewer that this is the Nifty future contract, it's 25, I've read in the book, that may give a wrong impressions. So you need to go to the NSC website to check the contract value, which has been changed. Also, the expiration date, which is mentioned in the book and which is currently is totally different. But for your purpose is to clear the exam, right? For interview purpose, you need to study what is the current things happening on the market, right? Just right. So this thing has been updated, which has been highlighted in yellow color, and I've also underlined the contract value. This one, this thing. So do not go over with the 25 value, because if the futures price which is mentioned is here, which comes out to 6 lakh. However, the contract value now change between 15 lakhs to 20 lakhs, and this has been done from effective 2024, November 2024. So SEBI has come up with the circular, and this is the master circular which is also mentioned there. You can also read these kinds of circulars for better understanding of any topic. Sometimes we do not read because the language of the contract is not good enough to understand what they are talking about. So what you can do, you can copy the content. You can copy the content and paste it any of the AI tool and get the understanding in a more simple way. So what you're learning is, if you're learning is to understand anything. Anything means any topic which is seems difficult to know, and you are not getting any information, but you are getting the same circular content in the websites or news website like Money Control or ET. So they may be sometimes difficult to understand. So this is important. There may be one questions which may comes here. They may be asked the what was the contract value before November 2024. It was between 5 lakhs to 10 lakhs. So you know that the Nifty value has also changed, and due to this change, the contract value has surpassed 10 lakhs. Last year in December 2023, the this contract value has surpassed 10 lakhs. So that's why they have reduced from 50 to 25 to the contract value to be between this number. However, SEBI has come up with a new circular and changed the contract value 15 lakhs to 20 lakhs, which may also increase the contract value from 25 to, you need to check what is the current contract value of Nifty 50. So what you can do, you can search the contract specification of Nifty 50 online, and you will get that information easily. So currently it is 75. It is 75. I don't know whether this question may be asked in the exam. However, you can remember it for your reference. So do you have any questions regarding this date? So what you need to remember, you need to understand the contract value between 15 lakhs to 20 lakhs on both the either Nifty or Sensex or any of the contract which is coming new. The lot size should be in such a way that the options, the contract value should be between this amount. Right. So let's go to the another update, page 59. Expiration date. So earlier there were multiple contracts, like weekly. There were multiple weekly contracts which has been expiring on different date day of the week. So what SEBI has come up with the thing that the exchange can only have one index which have a weekly expiry. Either NSE can offer weekly expiry only one index, and BSC can offer only week. So NSE has opted for the Nifty 50 as a weekly. Earlier, Bank Nifty was also expiring on a weekly basis. Now Bank Nifty has a monthly expiration date changed, and effective 1st January 2025, there is major change on the expiration of the contracts on Nifty 50, but that does not come that question in the exam currently. Once NASM updates that for future candidates who are appearing, that may impact us. But if you want to know the current expiration date, let me share you that information. This is for your interview purpose. So if you go for an interview, someone asks, what is the expiration date of the Bank Nifty or Nifty? So Bank Nifty earlier or uh, this was expiration on the last Wednesday of the expiration month. So that does not have a weekly expiry. It is a monthly expiry or a quarterly contract. So Bank Nifty currently have monthly and quarterly contracts, which used to expire on last Wednesday of the expiration month. Now they have changed on the last Thursday. Also, Nifty Financial Services, which is Nifty monthly contract, it was expiring on the last Tuesday. Now it comes to the last Thursday. Also, Mid CP Nifty, Nifty Next 50 also Monday and Friday. Now they have changed to last Thursday. It gives a simplification. We need to remember multiple day of the contract. It gets confusing, so it is a new thing which has been changed, but that will not come for your examination. For your examination you need to remember this. If the examiner asks you for Bank Nifty monthly expiration, you need to put it last Wednesday. If they are Nifty, but they will not write Fin Nifty. They may be writing this one. Uh, that- they may be writing Nifty Financial Services. Okay, it may have a different. Let me check. So that is a Nifty Financial Services which was expiring on the last Wednesday. They may ask you the weekly contracts of NSC. The weekly contract is Nifty 50. In the same way, BSC also opted for Sensex uh, as a weekly, not BankX. And the effective date was last year, October 1st. There is a major update in the tick size also. So we know that tick size is 5 paisa or rupees 0.5. So we can write 5 paisa or rupees 0.5 as a tick size is a price steps. Means the contract value changes in the multiples of 5 paisa. The 5 paisa is a higher amount. So what SEBI has come up with this, they have reduced the tick size based on the individual stock. So if any individual stock has a derivative contracts and the tick size for stocks which is trading below 250 is 1 paisa, it not be written as 0.01 paisa. It is incorrectly written. It can be written 1 paisa or 0 rupees 0.01. Maybe they have corrected in the book, but if you check on the NSC website, let me show you that. I am on the NSC website. If you see the tick size, they have written rupees 0.01 equivalent to 1 paisa. But in the book it is written differently. So do not remember is it is 0.01 paisa. It is understood they have not written it properly. It is 1 paisa or rupees 0.01. For your examination, do not remember this. You need to understand it properly. BSC, the stock price which is below 100 rupees, it has a tick size of 0.01 rupees or 1 paisa. So why the tick size has changed? What is the impact on this? I've got a question. So what is the impact? So the impact is the margin requirement. The margin will be less because the price will fluctuate on a 1 paisa. So 1 paisa will have a less price margin requirements. There is a risk management also. Higher fluctuations, higher price steps will have a higher losses also. So it also for the purpose and for the price fluctuations. So examiner may ask you, they will give you different options uh, related to the tick size. So they may create a questions based on this. So you need to remember three things. The tick size affects the margin requirements, risk management, and price fluctuations. So a smaller tick size will have a better risk management. Now let's go to the, if you have any questions, you can type in the chat box. Page 60, no, page 129. So page 129 is chapter 6, which is trading mechanism. So how the stock is eligible for derivative contracts. So they have, it has been changed because the price is also increased of the individual stocks. Now SEBI has come up with a new eligibility criteria, how the stocks will be included on that. Otherwise, if we go with the previous eligibility, that every stock will be eligible for that, so it will be very difficult for the exchange to manage those individual stocks, because most of the time the speculators comes and they speculate and trade on the exchange. So due to which that not every stock should be a part of the derivative contracts. So they have come up with a new numbers with the stock median quarter sigma size has been should not be less than 75 lakhs. You do not want to remember how to calculate this. If you want to know, you can search it, Google it. You will, if you want to understand it in a better way, how to calculate the stock median quarter sigma order size. Also, there is a market-wide position limits which should not be less than 1500 crores on a rolling basis. So average daily delivery size in the cash market should not be less than 35 in the previous 6 months on a rolling basis. So this eligibility has been changed. So if you're practicing any questions, if you come up any questions for this and you remember the options based on that, now the answer should be changed accordingly. What it means, so if you're practicing any mock questions and on that this number has not been updated, uh, so you need to change or you need to remember it as per the these things. And sometimes what we do, we do not remember these kinds of things. We think that it is difficult to know that, but it's a very easy question. So if you remember that the MQSOS is 75 lakhs. So how much time will it take to answer it in the exam? Because you don't have to remember it after clearing your exam, right? Nobody is going to ask you. It is a technical questions, because you are not the one who is taking this eligibility. It is the exchange which is checking these kinds of eligibility so that they can include on the contracts in their exchange. So there is also a checklist where the stock can be excluded from the exchange. Tick size are modified before, sir. So tick size 1 paisa, Manohar, is based on the price of the stock on the exchange. If the exchange is NSE, the 1 paisa will be for less than 250 rupees of the stock, individual stocks, not we are talking about the index futures and options. It's talking about the individual stocks. Also, modify latest lot size and expiration date question exam. Yeah, you need to remember this, not for modifying this. There is one new thing has been updated in the NISM workbook. It is the exit norms based on the introduction of product success framework for stock derivatives. For individual stock derivatives, So SEBI has come up with the PSF framework. PSF, so Product Success Framework, where they will be checking certain checklists. So they have created a checklist where they will see whether the stock will be on the whether we should exclude that stock on the exchange. So this checklist is based on that how many traders are taking positions on that individual stocks. So if the traders are at least 15% of the trading members should be active in all stock derivatives. So trading members, those who are traded during the last months, during the month, not last month, or 20 trading members. So it means that at least 20 trading members or 15%. So whichever is lower is been taken for the review, right? The second eligibility is trading on a minimum 75% of the trading days during the review period. So suppose if the review period is 20, so what is the 15% of the 20? 75% of the trading days. What will be the number comes is 15, right? If 20 is the trading days, 75% is 20, sorry, 15. So at least 15 days the trading should be done on that. Average daily turnover on a single sided. Single sided means buyer or seller. So you need to take on a single sided either future and option at least 75 crores is a daily turnover during the review period, or daily notional open interest single sided is rupees 500 crores. So this will be the eligibility checklist for the product success framework for the individual stocks. Or a stock must complete at least uh, 6 months, right, in the derivative segment so that it can be reviewed under this framework. So this question may be asked in the exam. What is the when the stock will be eligible for the PSF framework? It must complete at least 6 months in the derivative segment. So suppose a stock has come up in the derivative segment, so it must be at least traded in the 6 months so that the review can be done to check whether the stocks can be eligible for that. If the stock fails to meet this eligibility, so what will happen? So there will be no new monthly contracts. So and any existing expired contracts, they will be continue. uh, there can be any there may be new strike price for the existing contracts. So it means that the strike price will be for all. So it also has a checklist that if and stocks will exit from the derivative segment if it meets across all the exchange. It means that if they are failing in both the exchanges, it means it will be exit from both the exchanges. If it is it means the criteria in any one exchange, it will be continue in both the exchanges. So the SEBI has come up with this new framework for the eligibility, whether they will be eligible or not in the during the review period. The review period will be done on the at least it must be traded in 6 months when it was introduced. Suppose ABC stock has come up in the exchange, in both the exchange for a derivative. So traders will be traded on those uh, individual stocks, and after 6 months, there will be a review period. So this review period will have this checklist. So this checklist will be followed on that. If it is fails in one exchange, but it meets the eligibility in another exchange, that it will not be removed from the. But if it is failed in both the exchange, it will be removed from the exchange. So this is framework will not talk about in any of the video. If you will watch any YouTube videos related to NSM preparation, this will not be talked about. You need to create your own notes for this, and once you read once or twice, or you will remember it, then in examination when any one question, because this question may be asked, I because I haven't I don't know, nobody has given me any uh, thing that this question has come. I am sure the examiner will ask questions related to this, because in it is it's an important thing which has been added. Any questions on this? Eh, Check what is the next thing. 155. Or we have one more thing. This. Okay, so transaction charges. So IPFT charges has been introduced also. So IFT charges means Investor Protection Fund Trust. So it is created by both the exchanges, and if anything happens, if any trading member defaults and they do not have, what will be the question on PSF from your point of view? I can ask any questions, Ria, but the thing is that the examiner will ask those kinds of questions to understand your concept related to the PSF. So it will be better that you will create a note on uh, these things which has been colored in yellow, because these are the new thing which has been added. And when I see, sometimes they do not ask questions, but uh, there are a lot of things which has been updated. Definitely, if three or five questions is being asked and you uh, incorrectly answer those questions, thinking that you know that, it will reduce your marks, right? So if six questions are incorrect, you will reduce your 1.5 marks will be reduced from that. So it's important to get good score if you prepare well, because here these are the questions which increases your marks. Is a theoretical questions. You just need to read it properly before 2 3 days of the exam, and if you're remembering it today, you maybe forget after 30 days. So it's better that you're creating a short notes with these things which has been changed in the exam. So this has been is a transaction charges or active charges. GST also included in SEBI turnover fees. Earlier it was not updated. However, they were charging GST fees on that. There is no STT on the GST. So STT is already a tax which goes to the government. The question may be asked that who pays the STD. So you need to remember there are new thing has been added on the STD. STD means these securities transaction charges. The rates has been changed. So every year the government increases the STD charges. They need more amount of these kinds of taxes because number of traders are more, the trading volumes is high, so they are increasing the charges. So please update your knowledge based on the STD charges, the amount, what are the rates, and the in examination the STD charges and who pays the STD. It is very important questions. Let's go to another important topic is the uh, IRRA. So it is also a new framework. New, it is a platform. It is not a framework. It's a platform for the investors to for the risk reduction access. So what happens when any of the broker or broker? When we talk about the broker, here is a trading members. So trading members may have any glitches. Their sites is not accessible. Their mobile application is not working properly. You're not able to close your positions. You cannot cancel your pending orders. you cannot square off your positions due to some technical issues, technical glitches from the stockbroker side. So SEBI has come up with a platform which both the exchanges has jointly developed, that they will create a platform so that if individual investors are trading in the if any training members has informed that they are not they have a any issue in both their primary sites, or they have a disaster recovery side also, they both are not working, then the exchange will inform, and the this platform is gets activated. An exchange will send an SMS or email that this platform has been accessed and you can square off your positions. So this platform only permits the investors, only individual investor, not institutional investors or any algo traders. So if anyone has access to algorithm trading, so they are not eligible for that. Only individual investors, they can square off their positions, and the trading member will monitor those things, that the investors are not taking any position, new positions will not be allowed. Only existing positions can be score off, or the pending orders can be cancelled. So this what the trading member will have an admin terminal where they can monitor the actions taken by the investors, or they can also do take the actions on this. And there is a new framework which is related to technical glitches in stockbroking electronic trading system. So this framework will address that if technical glitches has been come up in that, what stockbroker will do, what are the actions that they need to take. So one, two, three, four, five steps has been given in this. You need to remember. They have come up with a new API based logging and monitoring mechanism, which is Llama. So they have come up with this also. They need to clear put this report, the root cause analysis within 14 days of the accident to the as per the format specified by the SEBI. They will submit this report to the exchange. So this is the framework which has been given when anything happens in the stockbrokers, or a platform which is given to individual investors, not to any institutional investors or algorithm. So this is also important. If I so it does not cater to the algorithm traders trading or institutional clients. So it is important that IRRA. So they so why the short form is important? In short form, the examiner asks you questions related with the short form. So you need to remember what is the short form of IRRA, is investor reduction risk reduction access. And they may ask the full form of IRR. So questions I can generate 5 to 10 questions out of this, but only one question may be asked in the exam related to this topic, both the topics, which is new in this. And there is no new sample questions which has been added. So I know whenever an ISM changes any content, they generally update new questions in that topic. However, here they are not updating it, they are not giving anything, any hint to the candidates who are preparing for the exam, that this kind of questions may be asked in the exams. So you need to prepare the questions related to these topics. Also, another topics is related to the legal and regulatory framework. Also, there is clearing and settlement system. The new topic has been added on that. So So whenever there is new I've updated on that. It will help you definitely try. I know that there you think that is a lot to study everything, but there are certain important topics are there. So this thing has been added, though it was changed uh, 2 years back. But however, they are putting this information here related to the peak margin rules. So there was a penalty for the shortage of the margin penalty for peak margin. So they have come up with a new thing that the peak margin rule will not be applied. Only the initial margin which has been taken as per the span margin or the extreme loss margins. So they so no, not any other margin will be taken during the uh, trading of the trading hours. And if there is any shortfall of the margin, no margins, extra margin will be taken. So this framework, this thing was done previously. However, NISM has updated this content in this workbook. So if I this was also the same thing. Uh, this has been updated. This is very, very important. As you know that there has been a lot of issue related to the cybersecurity, and our finance securities market should uh, have some kind of framework which should be internationally accepted. Means all the major stock exchange in the world, they have a framework related for the cybersecurity and resilience. And now SEBI has come up with this circular, which will be effective from 1st January 2025 in a phased manner. And now all the MIIs, like MIIs means market infrastructure institution, like stockbroker, depositories, and clearing corporations. So these MIIs will have to use these framework. Also the KRAs and the registrar and transfer agents. So last year, I think the one of the KRAs has a cyber attack. Some Chinese or Russian hackers, they have hacked the KRA system. So it is very important for this new framework, which will supersede, means the existing circulars which was there related to the cyber security. So they have come up with a new thing what they are supposed to do now. Though it is very small here written over there, though there is a circular which has all the information. They have, it is a summarized version of this. If you check with the Securities Market Foundation workbook, you will find a new thing which has been updated on that. But for you, the questions may be asked on these five cybersecurity resilience goals. So they may come up with that. What is out of the four options, which is not the cyber resiliency goal? So if you remember the five, anyone out of this five comes in the exam, you will exclude that and put the right answer. There is also major update in the investor protection. Earlier, the investor protection or any grievances was handled through SEBI scores. Now, SEBI has come up with the ODR platform. Let me search. So, ODR platform has, yes, this one. So, this ODR platform, uh, investor grievance. So, earlier the grievance system was different. And there is a free online course available in NISM website, online course related to the online dispute resolution system. So it is a smart ODR platform. For what purposes it has been come up, what are the things that they need to do, and this has a step-by-step guide related to that. And earlier SEBI grievance system was different, so do not study that grievance system. Now you need to upgrade your knowledge related to that, and you need to address uh, you need to understand the ODR, what is the ODR, and how all the securities market intermediaries following this platform. There may be few multiple 199. So I think this is the uh, thing which, okay, this is same 167. Okay. So there are whatever I have put it any yellow colored just for your reference to know the value for that. 63. So, okay. We have discussed all the things. You need to create notes for that. You can also create the questions based on that. So, for your understanding, use some of the AI tools to get questions on out of that, and AI tool will help you some of the MCQs created by you. Once you have an active learning, then you will be able to remember for a longer time. Right. I hope this session will help you. My purpose is not to teach you the entire topic. My purpose is to put out the update which has been in the NISM workbook, which is not be available on any of the YouTube videos, which you may be watching for your exam purpose. These are the topic which is new. And, it will help you for your examination. All right. Any question I want to address? Anything that you would like to ask? So, anyone who has an exam recently, who is taking the exam recently, on which date you have an exam schedule or you haven't taken? 28th January, 25th. Okay. So, how your preparation going? Are you well prepared? Recently on Friday, someone took the exam and shared me the result, and the candidate is already preparing and taking the exam fourth time, because the candidate is already working in the broking, switch from different segment in the broking firm. It was it so it was a different department, so it was sometimes difficult to understand the concept, though you are working in the industry. So now the examination cleared with 65 plus marks. So it is good that the candidate is able to clear with 1 or 2 day preparation, though the examination was not clear previously 3 times. So you understand how difficult sometimes for a working professionals to clear the examination first time. After clearing the examination, if you are in the working professionals, you can take the CPE, online CPE, to get the certificate renewal before the expiry of your NASM examination. So that will help you not to retake the exam um, again and again for these kinds of you know things which may happen, because the examination is asking the questions based on the workbook, and the workbook may not have the updated information. But if you're working, you know all the rules, what are the things related to that, and you may end up putting in incorrect options on that. So all the best for your examination. Do share your result, your feedback, and anything that I can add on my portal related to your preparations for any other examination also, not only equity derivative, investment advisor, research analyst, or other derivative examination for any different roles. If you're into foreign forex, you need to have a equity derivative. If you're a bond analyst, you may have a bond derivatives, which is interest rate derivative. If you're into commodity, you need to have a commodity derivative. If you're into financial planning, if you're working in financial planning industry, you need to have an investment advisor level 1, level 2. So different certifications requirement as per your job role, your requirement. Okay, all the best. I end up today's session. The session will be available for future reference. It will, or anyone who want to watch the recording, they can watch it for their reference. Thank you, everyone.